All right, let's just cut to the chase and crack the code on Canada's completely out-of-control car insurance premiums. If you're feeling that monthly squeeze when your auto payment drops, well, you're definitely not alone. In this explainer, we're skipping the basic generic advice. Instead, we're diving straight into the insider secrets and active strategies you can use to literally slash your rates. So let's talk about the elephant in the room. Why on earth is your squeaky clean driving record still costing you thousands of dollars right now? I mean, you haven't had a ticket, no claims, zero accidents, yet somehow every single year that renewal notice creeps higher and higher. It is beyond frustrating having to foot the bill for other people's mistakes, right? Seriously, I want you to just stop paying your Canadian auto insurance right now. Okay, at least until you've checked this one incredibly simple hidden math rule we're going to break down today. It's a total insider secret that can easily save you hundreds of bucks the minute you apply it. And honestly, it gets even worse. Thanks to some massive systemic issues across the country, insurance companies are basically forcing you to pay a hidden theft tax. You are essentially subsidizing a nationwide crisis. But don't worry, because today we're going to show you exactly how to legally opt right out of this completely unfair system. All right, so let's get into our 4 main hacks to slash your rate. We're looking at the asset and vehicle hack, the policy trim, technical adjustments, and hidden bundles and groups. Starting right off with hack number 1, the asset and vehicle hack, or basically, how to beat that hidden theft tax. You see, the exact vehicle you choose drastically dictates the base premium you're forced to pay, way before they even look at your driving record. And here's the crazy number why. $1 billion. According to a recent report by the Equity Association and Global News, auto theft is now costing Canadians over $1 billion in insurance claims every single year. These criminals are super organized, exporting cars overseas and using them for local crimes. And guess who gets stuck paying for those massive billion-dollar payouts? You do. You pay it through jacked up regional premiums. So if you're wondering where that money is bleeding from, just check out the very top of the Equity Association's most stolen list. We're talking about the Toyota RAV4, the Dodge Ram 1500, the Honda CR-V, and the Ford F-150. Criminals are specifically zeroing in on newer 2020 and up models because they can exploit modern keyless security vulnerabilities. Honestly, if you drive one of these highly targeted tech-heavy SUVs or trucks, it's going to absolutely destroy your insurance budget. The algorithms just instantly flag these vehicles as massive liabilities. So I'm super curious, is your vehicle on Canada's top 10 most stolen list, or are you flying under the radar? Do me a favor and drop your car's make and model in the comments below right now. I really want to see what everyone is driving and if you're getting hit hard by this theft tax. Moving on to hack number 2, the policy trim. This involves the 10% math rule. This entire strategy is about stopping the financial bleed of overinsuring older, lower-value cars. But real quick, let's just make sure we're clear on the difference between collision and comprehensive coverage. So collision protects your car if you crash into another vehicle or, say, a tree. Comprehensive covers your car when it's just sitting there parked, so things like fire, flood, vandalism, and, of course, theft. Now, the absolute key takeaway here is that if you own your car outright, meaning you aren't financing or leasing it, both of these coverages are actually entirely optional. Okay, so here is that insider math secret I teased earlier, the Rate Hub 10% rule. Basically, the rule is this. If your collision coverage is costing you 10% or more of your car's total actual cash value, you should immediately drop it. No questions asked. Let's actually walk through the exact math on this. Let's say your car is 10 years old and its current Blue Book value is, only $4,000. Well, if your insurance company is charging you $400 a year just for the collision portion of your policy, you're literally paying 10% of the entire car's value every single year. Keeping collision on an aging vehicle like that is just a guaranteed way to bleed money. You are way better off dropping it, saving that $400 a year, and throwing it into a high-yield savings account so you can just self-insure. Look, we all know how incredibly tough the cost of living is right now, and these auto rates, they just vary wildly depending on exactly where you live. So what province are you driving in right now, and what is your current insane monthly rate? Let's get a comparison going in the comments to see which region is truly getting gouged the worst. All right, up next is hack number 3, technical adjustments, or bypassing the standard profiling algorithm. This is where we actually use technology to legally bypass those standard demographic risk profiling algorithms. The ones that judge you based purely on your age, your gender, or your postal code. The most powerful tool here is UBI, which stands for Usage-Based Insurance. Take a program like Intact Insurance's MyDrive Telematics app, for example. The second you sign up, boom, you get a 10% instant enrollment discount. Then, depending on how safely you drive, you can earn up to an additional 30% off your premium. Basically, you're proving to the algorithm that you are a low-risk driver, totally regardless of your demographic. But hey, to actually secure that full 30%, you really have to understand how these apps are judging you. They rely on your phone's GPS, the accelerometer, and the gyroscope. They mathematically penalize you for things like rapid acceleration, slamming on the brakes, speeding, and, this one's wild, driving during what they call risky hours. That's between 2 a.m. and 5 a.m. Oh, and they also track if your phone is being handled while the car is moving. So avoid hard stops, skip the late-night drives, and you can effectively game the system for maximum savings. Also, for any new immigrants to Canada tuning into this explainer, first of all, welcome. We've got a specific technical adjustment just for you. Since you start with zero local driving history here, standard insurers will just automatically lump you into a high-risk, high-cost bracket. To fight back against that, get your previous international insurance records officially documented, and then immediately complete a Canadian accredited driver training course. According to ThinkInsure, doing this combo forces the algorithm to actually recognize your past experience, which triggers an instant discount. Finally, we have hack number 4, hidden bundles and groups, otherwise known as the discounts you forgot to claim. These are massive, pre-negotiated discounts that thousands of Canadians are 100% eligible for, yet they completely forget to actually claim them. Just think about this for a second. TD Insurance Meloche Monex states that they are trusted by over 750 professional, alumni, and employer groups. They literally have relationships with over 100 major Canadian universities and colleges alone. That just proves the sheer volume of organizations out there that have secret, preferred rates just sitting there waiting for you. So you really need to actively research your affiliations. Look into your college or university alumni status. Check your professional associations. Are you an engineer, a nurse, maybe an accountant? Check with your current workplace's HR department or your union. These group programs entirely bypass the standard retail pricing. Simply by linking your alumni or employee status to your insurance quote, you can unlock some of the absolute cheapest insurance rates in the entire country. It's a total game changer. Okay, so we don't just want to talk about savings, we want you to actually take action. Here are 3 exact steps you can take today to slash your bill. Number 1, find your exact policy renewal date so you know your deadline. Number 2, thoroughly check your alumni and employer group status for those secret rates we just talked about. And number 3, call your broker and have them run the math on the 10% rule for your collision coverage. Please, do not just passively accept your next auto renewal. Seriously, do not just pay your next bill on autopilot. Are you going to use these insider hacks to finally take your money back from the big insurance giants? Let me know in the comments which strategy you're going to deploy first. And hey, if you want more no-nonsense, highly actionable Canadian financial explainers exactly like this one, make sure you hit that subscribe button. Thanks so much for learning with me today, and drive safe.